now, finally, in the last 2 or 3 years, we're really seeing an awakening on inflation, but very few people understand or realize the source of it. And of course, the people who are behind it, which is the government, the establishment, they want to blame corporations. They want to blame everyone but themselves, but they're the cause of the problem.
Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vierra, part of the outreach team of Silver Bullion here in Singapore, where we want to help you truly secure your wealth. Stefan Gleason, CEO of Money Metals Exchange, joins us today. Money Metals is a national precious metals investment company and news service. Stefan launched his company while president of a national newsletter publishing company dedicated to helping subscribers protect their freedoms, assets, and privacy. And we're delighted to have Stefan join us once again today. It's time to saddle up and silver up for Stefan Gleason. Stefan, welcome back to SBTV. How are you doing?
Oh, it's great to be back again, Patrick. Thank you. I'm fine.
Yeah, thanks for coming back again. It's been a while since we had you on, so I appreciate you giving us some time again. And I'd like to start by getting up to speed with Money Metals, the two states in particular, Utah and Kentucky. So firstly, can you tell us about Utah and holding gold in reserves?
Yeah, so there's a movement kind of sweeping at the state level, sweeping the country here in the United States, and that is for legislators to embrace sound money and try to promote legislation that would remove taxes from gold and silver, prompt the state to hold gold and silver as a reserve asset, promote the idea of gold and silver as legal tender, and other reforms that enable states to at least do something to protect themselves against, and their people and their taxpayers, against the problem of fiat currency, which is largely a federal problem here in the US and around the world. And so we have this, situation where states can, competitively with each other, and then vis-a-vis the federal government can assert some of these principles back, even as Congress and the president are doing nothing, and of course actually making things worse. So recently, there have been several developments. My company, Money Metals Exchange, is heavily involved in the sound money movement. We have a group called the Sound Money Defense League, where we encourage our customers and other activists to engage in public policy battles that we're helping to fight at the state level in particular. And with bills such as removing sales tax and prompting state gold reserves. And we've had some good success this year, last year, and really the last 3 or 4 years. But this year, there's been literally about 40 bills at the state level involving sound money. Many of them are maybe a little bit, long shot type arrangements and perhaps too complicated and difficult to pass, maybe sequentially. But some of the really obvious basic ones are: let the state hold gold and silver. Right now, you have Tennessee has passed such a bill. Texas has done something in this regard. Ohio is holding gold in its pension and firefighter and police pension fund. And just about 2 weeks ago, the state of Utah and the governor of Utah signed a bill that would prompt the state treasurer to hold gold and silver in the state reserves of Utah, and in a number of funds which are highly exposed to debt paper type investments, corporate bonds, treasuries, CDs, and so forth, agency debt, stuff that has a negative real return. And that's really the problem. You have these supposedly safe assets that states are holding and individuals are holding, pension funds are holding, but they have a negative real return because their yield is not keeping up with the very high inflation rates. And so, yeah, maybe they're not crashing to zero, but they're sort of baked in like negative real returns of 3, 4, 5% a year because inflation rates are so much higher than the yields. And so Utah is one of the few states so far that has really been forward thinking about this and said, we need to hold gold and silver to hedge against this inflation and counterparty risk in our state reserves. And so they not only authorize the state treasurer to hold physical gold and silver, but they further are prompting and actually directing the state treasurer to come up with additional proposals of how gold and silver can be used to enhance the financial security of Utah citizens, families, small businesses, and the state itself, and actually has to come back to the state legislature by the end of the year with a number of other proposals. Um, Conversely, the state of Idaho, which is actually where my company is based, and we're a national U.S. dealer, but we're located in Idaho. That state, unfortunately, has not been able to get sound money legislation passed. And in fact, just last week, the liberal Idaho governor Brad Little uh, vetoed the same bill that I just described that Utah had passed. And it's really interesting because you have both of these states, Utah and Idaho, are historically mining states. They were founded and settled by miners. Gold and silver is part of the DNA of both of these states. Um, and silver is called the gem state, which it talks about its other resources and gems in mining. And silver was like the number one, you know, output of the state of Idaho for a long period of time. It was the number one place for silver mining. And yet the governor there has vetoed a bill basically saying we don't value gold and silver in our state. So that's not necessarily representative of the state legislature or the people, but the governor had the final say and they weren't able to override his veto. Um, at the same time, we're seeing a lot of progress on the sales tax front. And in fact, that's really where the biggest progress has been for sound money at the state level. And that's removing the sales tax from the purchase of gold and silver. And we've gotten to the point now where we literally have 45 states that have exempted, 45 out of 50 states have exempted the purchase of gold and silver. The most recent were both this year. The state of Wisconsin passed our bill to end the sales tax in Wisconsin on gold and silver. And then just last week, the governor, well, really what happened in Kentucky is we passed the bill in Kentucky. The governor did a line item veto of a larger bill, and the legislature deemed it an illegal veto and said you can't do line item vetoes on revenue bills. This was a revenue bill, and so it violated the state constitution. They sent the law to the Secretary of State and said, enroll the law in the books. And so unless the governor of Kentucky, Andy Beshear, files a lawsuit, which I don't, well, we'll see. That's now the 45th state with such an exemption. So we're seeing a lot of progress at the state level, and we're working hard on that at Money Metals. And I think a big part of the reason we've been successful so far has been by engaging the grassroots people in each of these states and asking them to contact their legislators and make phone calls and emails, and that has really been what's put a lot of these bills over the top. So it is promising at the state level what we're seeing in the U.S.
Great. It's a lot of good info there. I'm interested though in what you have to say about Idaho because as you mentioned, they are mining states up there. Uh, Governor has sent a bad message, I would say, to the miners. What do you see the miners doing as far as their silver and gold and selling it for fiat and now maybe even not getting support from their own state?
Yeah, mining is a very, very tough business. We all know that. It's probably one of the most difficult businesses to be in. Very capital intensive, very long lead times, lots of opposition arrayed against mining, whether it be governments, whether it be eco fanatics, whether it be indigenous peoples who want their cut, uh, you know all kinds of capital restraints and capital needs, and safety, everything else. Difficult industry. Um, and so I actually just wrote an article. We published it today on this idea of gold and silver miners. A lot of them, or really most of them, don't seem to believe in their product. They're literally mining money. They're pulling gold and silver out of the ground, and then at the first opportunity, they're selling it for fiat money, and at whatever the price is at the moment that they complete the process. And so, that a good example of sort of, of the difficulty is Barrick Gold, which, has been a mainstay company, but they literally haven't made any money, or I shouldn't say that. Their stock has gone nowhere in 20 years. But the gold price has gone up 600% during the same period. And so, investors are kind of looking at mining and going, what, it seems like it's way better to invest in the product and not the process of mining. And so, one of the arguments is that maybe mining companies are poor capital allocators. And an example of that is literally that they sell their production today with the idea they're going to be able to produce replacement ounces in the future for less. That doesn't seem likely to happen. And so there's actually one company called Silvercrest Mining. It's a silver-focused miner, and they actually are holding gold and silver on their balance sheet as a reserve or as a balance sheet asset. As 20% of their treasury is in physical bullion. And of course, they have the luxury. I guess they're actually profitable. They've paid off their debt. They've gotten themselves into a good place. A lot of companies can't do this, but they're actually out there saying, "Hey, we need to rethink the way we're allocating capital and rethink the idea of selling every ounce as soon as we pull it out of the ground." And that may have another impact, which is less production coming to market. In other words, perhaps that will push prices up as supply goes down. And so maybe that's something that will sort of change the investor mindset about the mining industry, which unfortunately has been negative because they've been such poor, performers. And so, people tend to favor physical bullion. Frankly, that's a way better way to go. Mining is very risky. I personally like the royalty companies because it removes some of these risks in mining that the traditional miners have. But that's a big issue, and we're starting to see more companies, not just in the mining sector, but in general. Not many, but more of them are looking at the idea of, hey, when we don't need just a big pile of cash in our savings, in our reserves. States also, individuals, businesses, any business, you can hold some physical gold and silver as a form of savings and cash. And I think that is a mindset that hopefully will change and that is very slowly starting to change. And so, that's kind of the message of that article.
If you're enjoying this interview with Stefan Gleason and I, please subscribe and give us a thumbs up. And did you know that at Silver Bullion, there are 6 different types of accounts to fit your needs? To find out more, go to www.silverbullion.com.sg, click on the sign up tab, and choose from these 6 types of accounts. Or email me, Patrick at silverbullion.com.sg, and I'll help to get you started. Still, though, it's interesting where you would approach states, you would bring up the notion of gold and silver and how well they do in inflationary times over long term, midterm, long term, and they still a few of them still don't want to do it. Like this Idaho governor. I mean, legislature says yes, people want it, and what reason would he have it to say no and veto it?
Well, so I mean, for one, this guy's kind of a globalist, the governor of Idaho. He's a kind of a left wing. He is technically a Republican, but he's been shown to be very very liberal. I think some of it not in his case necessarily, but in general, there's a lot of ignorance, if you will, about sound money, and it's not necessarily a hostility. With some it is, but with some it's just a lack of knowledge, because gold and silver has been driven out of the public consciousness over the last 100 years. Since we removed gold from the financial system, and particularly starting in the 70s, but even back in the 30s, the media, the establishment, the financial establishment, the academia, they've all embraced this big government Keynesian economics model, which is it's anathema to sound money. It's basically the idea that you can use government power via and through monetary policy to influence asset prices, to influence behavior in the private sector, to have the government come in and bail out and be dominant fiscally and drive the economy. And that's very contrary to sound money principles. It leads to huge amounts of debt. It leads to inflation. We're seeing that in spades. People are now finally, in the last 2 or 3 years, we're really seeing an awakening on inflation. But very few people understand or realize the source of it. And of course, the people who are behind it, which is the government, the establishment, they want to blame corporations. They want to blame everyone but themselves. But they're the cause of the problem, and they try to scapegoat other people, scapegoat businesses, go into price controls, bash corporations bash restaurants for raising prices, trying to come in, and regulate that. So unfortunately, big government people will typically their answer to every problem is more government, and not, introspection. So this is where I think education at the state level, education of the grassroots, and then mobilizing them behind smart legislation that actually addresses this. Hopefully, we'll see the reforms, take effect peacefully and without, disorder. But it's quite possible that we'll just have a total catastrophe financially and monetarily, and maybe then we'll see the right policies come back. But it could get worse. So it's a very precarious situation. But I do feel like the sound money idea is gaining strength.
Yeah. Well, I mean, speaking of education, my public education tells me if you said 45 states are pretty much on board, that leaves 5 states that are not. Well, what reasons are these 5 states giving for not being on board with sound money?
Yeah. Well, in Maine, we had a bill that almost passed. The Democrats decided it was the one bill they wanted to prove. They still controlled the legislature because they had stopped every Republican proposal last year. So that became a partisan issue. And it will come back next year. There'll be a bill there. In New Jersey, a total Democrat-controlled state, we passed the bill through both chambers last year. The governor vetoed it as part of a bunch of end-of-session vetoes. It's now passed through one of the chambers again this year. I think we might actually get this done in New Jersey this year, which would bring it down to 4 states. So we've never had a bill sponsor in New Mexico. We have had success, at least on one side of the legislature in Hawaii. Let's see, we have Vermont, Maine, and New Jersey. That's it. And then there's a few states like California, Florida, New York, Kentucky, or New York, Connecticut, and Maryland that have these thresholds where they charge tax on the lower transactions, but they don't charge it on the larger transactions. So it's almost like a poor tax. Like, hey, you're only able to afford $1,000 of gold and silver. We're going to charge you a sales tax. But if you can afford 5,000, we're not. So it's a totally ridiculous policy. So that's actually sort of a second wave effort that we plan. We've already gotten rid of that in Virginia, but there's still those other states that have that sort of discriminatorily, the bifurcated system. But it takes time.
Yeah, that's sad to hear. I mean, somebody out there might be trying to, they're aware of what's going on. They may be just trying to get themselves some silver here and there, and they're getting taxed for it.
Yeah, it's material. I mean, when you're buying bullion, when it's not a collectible, it's really just value of the metal. It's a commodity / money, and it's meaningful. 5, 6, 7, 8, 10%. California, I think it's like 10 or 11%. If you get socked with that tax, that's significant. I mean, that's way more than the dealer's margin. But what it does, and this is one of the reasons where we sort of seem to have a momentum on getting rid of the sales tax is, you're now looking at situations where every state that has a sales tax on precious metals, they're surrounded by states that don't. And so people leave the state, businesses leave the state, coin dealers are not able to be successful. People just cross borders, bring it back in from the neighboring state. And so the conventions refuse to go, like coin shows and stuff, they literally refuse to go to those states that have the tax. And so it's really becoming uncomfortable for those final few states. And that's really been why we've been so successful. One of the reasons in the last few years, it's just kind of like dominoes. So then from there, we're moving next to, Money Metals and the Sound Money Defense League. We're moving to the income tax side of this. So you have the tax on the buying, which is the sales tax, and then there's the tax on the selling, which is the income tax. And of course, if you have a gain in gold and silver, that may mainly just be a reflection of the devaluation in the Federal Reserve note, not necessarily a real gain. And yet you're taxed on that so-called gain because of the income tax or capital gains tax. So we have proposals in a number of states that are moving forward, some of which have already passed, to end the income tax on the sale, on people selling their gold and silver, to exempt that side of the transaction from tax. There's a bill in Alabama right now. There's one that's on the governor's desk in Nebraska. We've already passed one in Arizona and Arkansas. And then there's a few states that and Utah, and then there's a few states that simply do not have an income tax at all, so everything is exempt. So I think that's phase two, and looking at, in terms of sound money policies, fundamental policies at the state level. I look at the tax on the buying and the selling as the main impediments that prevent gold and silver to be considered and used as money. That friction on the transactions, buying and selling, using, because even if you trade gold for something else, they're going to want a tax on that, if because they consider that a sale. And so, ending the friction of taxes, I think, is probably the most practical way to remonetize gold and silver. And so we're heavily focused on that. And then gold reserves and so forth for states is sort of also right there as a top policy.
I have a question here. It may be a little bit off of what we're talking about, but say I go to a dealer, I buy a 1964 Kennedy half dollar. Do I get taxed on that?
If you are in those 5 states that I mentioned, or the other states that tax the smaller transactions but not the larger ones for precious metals, then yes, then you are taxed. Yeah, yeah, and of course the half dollar thing that is such a great example just to help people understand the devaluation that has occurred, because a Kennedy half dollar that's made of silver in 1964 is currently worth something like 18 $19, well, yeah, about $18, $17, something like that at current silver prices. You'll have to check me on that, but anyway, it's many multiples of the current face value. But if you have a 1965 version, which is well, that one's 40%, but let's take a quarter. 1965 was 100% copper and other clad metals, not precious metals. That's still worth today. The face value, which is of course way less than what it was 50 years ago. So when people kind of think about that, like, wow, this one's worth 15 times more than this one, and they it's just the metal they're made of. They both, but if I go and spend it at a store, they're going to give you the same value. So I think that that helps people sort of understand what's occurred in terms of robbing the value of our money over the last 50 years, really.
Yeah, that's I can see a lot of arguments going on in those bullion stores when people are buying these things 64 and a 65 and such a big price difference there.
Of course, nobody buys the 65 because it's pretty much it's worth a quarter, which is now worth almost nothing.
True, true. Stefan, let's say all 50 states they eliminate the sales tax on precious metals. Maybe they say they're going to start holding it in reserves. Curious though, what would the dynamic then be between the states recognizing precious metals as legal tender and the federal government who may not?
Yeah, I mean, there certainly is some. Well, one, I think it probably further gives weight to the idea we need to address this federally, because states are sort of opting out and objecting to what's happening. There is a bill on the income tax federally as well. Congressman Mooney has a bill. It's called the Monetary Metals Tax Neutrality Act. He's actually about to reintroduce it here in the next few weeks, and that would remove the federal income tax from gold and silver. But I think that unfortunately there just is not the current environment or ability to impact federal policy on this front, in the same way as we can at the state level. And so I think the more success we have at the state level, the more chatter, the more discussion, the more grassroots energy gurgles up to the federal level. But there really is really no will right now federally. If you start getting a situation where states, another thing that's happening is states are passing these bills that say we will not acknowledge a central bank digital currency in our state. We will not recognize it under the Universal Commercial Code. We won't accept it. We won't allow it to be used. And so there are some things where states are setting up this potential conflict with the federal level, where the Federal Reserve has literally been involved in pilot projects to experiment with the idea of rolling out a central bank digital currency, and which China is already way ahead on, and they view it as China. Wow, they're way ahead. But what China's way ahead on is totalitarianism via this kind of system, And the Federal Reserve, since they're totalitarians, maybe light totalitarians, but they're attracted to that idea, and they've been experimenting with how they would do this. And so some states are saying, wait a minute, we're just going to let you know right now, we will not recognize or acknowledge any of this in our state. We won't enforce it. And that's one way states can put pressure on the feds and say, look, this isn't going to work. There's a federal bill right now also that Mooney has, which has not passed, but that would make it, would block the Federal Reserve and the Treasury in the U.S. from experimenting with this. But that's a real concern too. So I think states are seeing that coming, and they're doing what they can to block it.
Yeah, because my understanding is with these central bank digital currencies, the Federal Reserve cannot implement this unless it's congressionally approved. So there is a way out of it still.
Yeah, yeah. I mean, but that's not stopping them from playing with the idea, and working on proposals and trying to figure out the technology and so forth. So, and that's happening. I've talked to officials, in conversations. I know that they're doing it. They're being a little quiet about it. It's interesting. A lot, one of the justifications given is, well, we need to make sure that the U.S. dollar maintains its place, and so this is how we're going to kind of help, make the dollar more pertinent and relevant, and further wire the dollar in. The problem is that we're doing everything it seems like we can do to diminish the prestige and appreciation for the Federal Reserve note dollar, which isn't really even a dollar as defined by the original constitutional dollar. But the Federal Reserve note system, we're weaponizing it. We're blocking people out of the SWIFT system. We're threatening to seize Russia's bonds. Other countries look at that and go, I'm not so sure. I'm not at crossways with the U.S. right now, but gosh, if I ever want to get crossways or get kind of crossways, they're liable to do something really draconian, and so that's chasing people out of the dollar. That's causing the BRICS and other alliances to form and look for alternatives. It's also causing some countries to be concerned about having their gold at the New York Fed. And, Congressman Mooney recently did an inquiry with the Federal Reserve and said, we want to know how much gold countries that are holding at the Fed is being repatriated back to those countries. And the Federal Reserve just completely blew him off, gave a completely ridiculous non-answer response. Then a reporter with Headline USA sent in a public records request. They blew that off and said, well, even if we had records on that, we couldn't give it to you, which is totally the wrong way. They are supposed to acknowledge that there are records and then say why they can't give them. They're not supposed to say, well, we're not telling you if we even have records on this. So there may be a lawsuit over that. But I think that they're desperately worried that if more people are aware that people are pulling their gold from the United States and the custody of the Federal Reserve in New York, that it will cause even more alarm. And, so again, it's all about, and see among the central planners, it's all about stopping people from doing stuff, and they get more aggressive instead of a little self-reflection on, hey, what are we doing wrong here that is harming our place and causing people to want to work around us. And that's what we're not seeing happen. And that's just, it's a knee-jerk thing. Just double down, stop people, and then you get to the end of the process, and you go, where's the freedom? Where's the we've turned into this thuggish kind of thing. And so anyway, that's what we're seeing happening, and I think we're kind of our own worst enemy on this.
Yeah, I completely agree. I mean, I'd say there's a real fear that the U.S. As they did Russia, can and will freeze assets, whatever they have in their possession of any country it chooses to do so. And this word distrust, I guess I would use, it comes to mind here where this sentiment, as you mentioned, why wouldn't it cause other countries to start to ship their assets out of the US?
Yeah, and I think that's happening to some extent, and we just don't want the world to know. About 10 years ago, the Bundesbank in Germany pulled some of its gold back, and it was really intriguing because the answer was, well, yeah, we'll get it back to you. but it'll be 7 years. It'll take 7 years to do it. And it's like, Money Metals Depository is one of the largest private depositories in the U.S. We hold, we have over 10,000 storage customers. We have their physical metal in bins, containers unique to them. I know you guys have an impressive facility in Singapore. It's called segregated storage. It's their property. If you want it back, you can have it immediately. It's your property, and there's maybe a little bit of processing time, to get it out, audit it, send it out, whatever. So why would it take 7 years and it ultimately only took 3 or 4, but they originally said it'll take 7. Why would it take 7 years to give Germany its gold back when it's sitting in a container or a cage at the New York Fed? Unless, perhaps, it's been mobilized in some other manner. Has it been encumbered? Has it been leased? For a yield and of course the whole idea of leasing is amazing. I mean, it's a legitimate, way of getting a yield on gold. But if you look at what it is, if I have metal and I lease it out, the other side acquires it. I still think I own it. They may then sell it and then buy a futures position against it and say, well, we still have it. We're hedged it. But now the gold's, no longer in my possession, but I think I own it. They may not have it in their possession. And so this daisy chain of transactions, and there's James Turk just wrote an article in the last few days at Gold Money commenting that he thinks part of the reason for some of the energy in the gold price in the last few weeks has been some of these transactions unwinding, these daisy chains of leasing and rehypothecating. And so, if people are sort of scrambling to make sure they have the gold they think they have, and there's maybe more gold ownership out there than people realize, for the amount of ounces there are, that could get really interesting. And so that may be part of what we're seeing in terms of the gold price. I think the main driver, of course, is just central bank buying, which has been, continuing quite a bit in the last 2 or 3 years. It's been accelerating.
A lot of people are buying gold right now, silver. They're picking it up at Costco or wherever they can. Do you foresee maybe the government once again making it illegal to possess gold?
So when that occurred in 1933 with FDR, that was a time when there was a statutory requirement that the Treasury had a certain amount of gold before it could issue new currency. So that requirement is gone. There's no restriction. It's this very simple process. So in that sense, there's no structural reason for them to want or have the gold, because they can inflate without it. My view is that's honestly that's a notion that is largely pushed by those that are trying to sell people on very high margin collectibles, because they say, oh, these weren't confiscated, but if you buy that and you do what they're asking you to do, you're basically agreeing to a confiscation of half or 3/4 of your investment on day one in order to buy their premium marked up rip-off coins on the idea that they somehow protect you from future confiscation because there was some precedent, which isn't, the precedent's not binding anyway. So I don't really give much credence to that argument or concern. I think that the easiest thing for the powers that be in the United States to do with respect to shoring up some sort of problem that they've created with their bond market and so forth would simply to be change rules on IRAs and say you got to own 40% U.S. Treasuries in your IRA. Force you to buy, or you'll lose your tax benefit and so forth. It's very easy for them to do that kind of thing. I think going and asking people to turn in their gold, I honestly don't think people would do it. They've seen this before. People are much less trusting, fortunately, of government for good reason. And so I don't think that will be successful. I don't really think that's that much of a risk, honestly. But you can't rule it out. I mean, honestly, under the War Powers Act and the Trading with the Enemy Act and other federal laws, really, the federal government in the United States claims the power in a crisis to seize any private asset, a boat, a house, your gold, your bank account. So, there is the mechanism in place to suggest this is any kind of seizure is legal. So I wouldn't put it past them, but I really don't think. I think, like I said, I think it's an overblown concern, and I think the people that are promoting that as a concern are the ones that are ripping people off in our market, unfortunately. And I have a problem with that. And that's really a big part of how my company was founded, was because of these TV-based, celebrity spokesman-based bait and switch people that are bringing discredit to our industry, ripping people off, selling them on 100%, 200% marked up coins and bullion that they're calling collectible that are not. And so that's honestly, those are the folks I think that push that narrative the most. And I don't really give it much credence.
Okay, sorry, that last question. Are you seeing more guys going into precious metals IRAs, or maybe asking you about precious metals IRAs?
Yeah, I mean, I'd say, maybe a third of the accounts at Money Metals Depository are IRA type accounts. And so, in fact, it's not a majority, but it is definitely a lot. And that's where a lot of people have their money in the U.S. is in retirement accounts. And so that's one place they were looking to preserve their holdings with gold and silver. We're building a massive new depository in Idaho as a result of the growth of the storage business, partly because of IRAs. It's 40,000 square feet. We move in this summer. It's the largest facility west of New York in the United States. Our vaults are twice the size of Fort Knox. Fort Knox's vaults are only 4,000 square feet. Ours are 8,500 square feet with an opportunity to expand further. So, I mean, there is certainly a lot of retail accumulation of gold and silver, both in their people's possession, which is what most people do, and everybody should start with that. But then when you get into larger amounts, or you have it in your IRA where the rules require that a third-party custodian hold it, people are putting gold and silver in depositories, including ours. So I do feel like there's a lot of progress, at least among the public, in awareness of how gold and silver are assets that, the Costco thing is helpful. Even though that's a competitor to Money Metals and other dealers that specialize in this, the fact that they're using their distribution network to introduce people to buying, PAMP gold bars, I mean, maybe not at the best price, but either way, they're getting them. And when eventually as they become more savvy and sophisticated, they'll probably form a relationship with an online dealer like Money Metals, and maybe, get more involved. But the bottom line is that's very helpful. And I think we are seeing an awakening of interest in gold and silver at the retail level in the U.S. and at the policy level, at the state level. And so I think we're moving in the right direction. And, people don't have to sit idly by looking at the problem saying, I can't do anything about this. They can go on their own gold standard, their own silver standard, and at least protect themselves and their family. And people are starting to do that.
Right, great point. Well, I'm pretty sure Idaho is going to be filling up with precious metals. You mentioned Fort Knox. I don't know if there's anything at Fort Knox.
Yeah, ours is audited, and yep. Fort Knox has not been audited for 70 years, an incredible way. So, and maybe that's the other thing. It's the ultimate national security. We can't audit Fort Knox because if we did and it turned out there were problems or had been encumbered, then that might be curtains. So anyway, that's an interesting topic in and of itself.
Before we wrap up, can you tell us how we can follow you on social media, if any accounts, and more about Money Metals Exchange?
Yeah, thanks. Go to our Twitter handle, or X is at Money Metals, and our website is moneymetals.com. Go to moneymetals.com and get on the email list, and we will be able to alert you about state legislative battles in your state. Our public policy group is Sound Money Defense League, and that's soundmoneydefense.org is that website. And so I'd encourage people to go to either of those websites, especially moneymetals.com, and get on the email list, and then we can engage you in these battles in the U.S. And we also publish a lot of great content that's pertinent all over the world.
All right, Stefan Gleason, I'd like to thank you for your time and your work on sound money and helping to protect the good people out there. And I hope we can do this again soon.
Thank you, Patrick. Really appreciate the time. Thank you.
That was Stefan Gleason sharing his views on precious metals and the economy. To see more of Stefan's views and work, please go to www.moneymetals.com. If you like this video, please do subscribe, give it a thumbs up, and share. All are greatly appreciated. Audio-only versions of this interview can be found on iTunes and Spotify.